Okay, welcome to the episode 3 of trading exercise that we do every Sunday. And today, as always, we are going to analyze liquidity sweeps. Okay, we are going to practice them so that tomorrow, when the market opens, we can easily identify them. Okay, but before we start, who am I? So, my name is Jascha Roth, and all I do is literally document my trading journey on YouTube because my goal is to get rich with trading, get financial free with trading, and that's about it. Okay, so I decided to document my journey on YouTube as well so that you can take the most helpful things, and whatever is not helpful in your opinion, just ignore it. Okay, so basically, what are liquidity sweeps? Before we answer that, we need to see liquidity. Okay, liquidity is basically the reason why the market moves higher and lower. Okay, for example, when we go here to this HDB chart that we are analyzing in this season of trading exercise, you can see that it goes up and down, up and down, up and down. So basically the reason why the market is going up and down is liquidity. Okay, liquidity, as I wrote you here, is the reason why the market is running. Okay, so liquidity actually means money. Okay, liquidity is money that, for example, when the price goes to a certain point, then that money gets into the market, because liquidity can also be described as stop losses. Okay, for example, if I am shorting right now here, let's say, okay, and then the market goes up, okay, I am over here stopped out. Okay, I get stopped out with this little move higher, and the money that I lost goes into the market to another person, or for example, someone else uses my money to buy their positions. Okay, and this is how the market is moving up and down. Okay, people are constantly losing and people are constantly winning, and this is basically the reason why the market is moving. Okay, so liquidity are actually stop losses. Okay, and how do we know where the liquidity is above swing highs and below swing lows. Okay, this is the reason why we, in previous episode, why we identified highs and lows, because right now we are going to use them. Okay, so what is then a liquidity sweep? It's simply the following situation. Okay, for example, we are moving down. Okay, we are in a bearish trend, and then what do we have to do, or should I say, what does the bank have to do to change the trend from bearish one into a bullish one? What do they have to do? They have to fill massive amount of orders. Okay, so where do they get the orders? Here below and above the highs and lows, because over there people have stop losses. Okay, so what actually happens? Then the bank pushes the price lower. Okay, people over here are forced to sell because they have stop losses everywhere over here. Okay, and then the bank, what does it do? It uses those positions, okay, because they bought the stocks here and here and here and here and here and here and here. They buy stocks everywhere over here for a cheaper price. They reinvest the money that they got with these sold positions. Okay, because of the people. Okay, so basically people sell the positions because they get stopped out, and banks buy those positions. Okay, so they fill massive amount of orders, and then the price continues higher and higher and higher and higher. Okay, so what happens then when the bank wants to change position from bullish, I mean the trend from bullish to a bearish one? What do they have to do? Yet again, they have to push the price higher. Okay, so that people are forced to sell all those positions over here. Okay, and since people are selling because they have stop losses over here, okay, banks are buying those positions and then dumping everything back down. Okay, this is basically what it is. Okay, so what is a liquidity sweep? Is when we have a line and then we push like the price above that line or over here below that line. Okay, you are going to see it on the chart. It's very simple. So right now we are on the chart, And what can we do to identify liquidity sweeps? For example, we take a look at highs and lows, okay? Swing highs and lows. Let's go together through somewhere. Okay, now here we have a massive down trend. Let's go, for example, here. Okay, what do we have? Let me zoom it a little bit. What do we have over here? We have a swing high. Okay, and then what does the price do? You see the price comes higher, barely pushes above this particular swing high, and then dumps. Okay, goes bam, lower. Okay, and then lower and lower and lower and lower and lower. Okay, what does it do, for example, over here? And here we have equal lows. What does it do over here, for example, as well? Look, we have a swing high over here. The price goes above it, okay, sweeps liquidity. This is liquidity sweep, and then continues lower and lower and lower and lower, okay? And then, for example, over here, look, over here we have also swing low, okay? The price pushes below it, okay? Sweeps liquidity and then continues higher and higher and higher, okay? Good. Then over here we have a massive bearish trend, so I'm not sure if this is even like meaningful to analyze. Maybe over here. What do we have over here? We have one particular swing low. You see one here and then another one over here. We have swing lows, okay? The price pushes below it and then continues higher and higher and higher, okay? So all of this over here is a liquidity sweep, okay? Now let's go to another chart. Let's go to 3-hour chart, for example, and let's take a look what do we have on the 3-hour chart. As expected, we have many different sweeps, okay? For example, here we have one particular swing high, then the price goes higher, sweeps liquidity, and then continues essentially lower and lower and lower, okay? Then what do we have over here? We have one particular swing low, the price pushes below that low and then continues higher and higher and higher, okay? Then what do we have over here? We have a swing high, the price goes above the swing high, okay, sweeps liquidity and then continues lower. Then what do we have, for example, over here? Nah, shit, over here. Okay, we don't touch it. Perhaps over here, maybe over here, yeah. Okay, the price goes lower, sweeps liquidity, and then continues higher. You see, liquidity sweeps are very easy to identify. Like all we have to do, brother, is just analyze the swing low. For example, over here we have a swing low. The price goes below that particular swing low. Okay, this is called liquidity sweep, and then continues higher and higher and higher and higher. Okay, that's it. You just look for swing highs and swing lows. For example, over here we have a swing high. The price goes above that particular swing high and then continues lower, goes up again, continues lower. Okay, that's it, bro. That's it. Okay, those are liquidity sweeps. It's nothing too crazy. What do we have over here? Or over here maybe? Okay, yeah, we already analyzed that one, so we can ignore it. Then what do we have over here? Okay, the price goes lower, sweeps liquidity, and then continues higher and higher and higher. Okay, what do we have over here, or even over here? We have two swing lows. The price goes below those swing lows and then continues higher. Okay, it's that simple. Then what do we have over here? We have one particular swing high. The price goes above the swing high. You see over here, that's liquidity sweep, and then continues lower. You see, they are everywhere, bro. Every fucking where. Look this. We have a swing high. The price pushes above the swing high. You see over here, sweeps liquidity. People over here are forced to sell because they have stop losses over here like this, for example. They went short over here. They put stop loss like this, okay? They went short. They put stop loss over here. The price goes above that particular stop loss and then tanks. Look, bam. That's it, okay? So liquidity sweeps, bro, are easy, okay? Identify swing high and swing low, and then just wait that the price goes either above the swing high or below the swing low, and then if it reverses, that's a liquidity sweep, okay? It's that simple. It's that fucking simple, okay? Now my dog is begging me to go out, so at this point I want to also invite you to join my Discord server, okay? It's in the link in the description. It's for free. We have, for example, over here we have daily analysis, okay? So basically daily bias. We have trading breakdowns, for example, over here. You see those are all my trades that I'm taking. And we also have a little bit of self-improvement. Why? Because our mission is to become better traders and stronger men. So you want to support that idea if you are watching already up until this point, so you can as well subscribe to the channel, because I'm trying to teach you as much as I can with my own experience, okay, what I experienced. So subscribe and support me that way. Thank you very much, brother. Do the hard work and see you on top of the world.